Welcome to the second Wednesday morning break with Foster Swift. Today we have Taylor Gass, who's in our our Lansing office, and he's a business corporate attorney. He's been with us before, and he's going to join us again today. Thank you, Taylor, for joining us. He's going to talk today about different stimulus options, PPP, the second round, forgiveness, local grant options, including employee retention tax credit. So there's a lot to discuss. So we're going to go ahead and get started. Just as a reminder, though, in the chat feature, feel free to submit your questions as we go along, and we'll do our best to get to those. If we don't, we'll address them afterwards, and this is being recorded and it will be posted to the website. So with that, we're going to get right at it. And Taylor, what stimulus-related issues are businesses currently facing?
Yeah, so there's been a number of programs out there, and I think probably the biggest issue that some of our business clients and our local businesses are facing is almost a multitude of too many options and so many programs that it's tough to know, what do I qualify for, what's out there, am I missing something? And it's hard enough just to keep track of, one of these programs at a time, because the rules seem to be constantly changing. But on top of that, we've layered on, program after program, which is great. Obviously it's a good problem to have to some extent, but it's led a lot of the conversations that I've been having with some of our business clients. I get the sense that there's a little bit of confusion out there. So the hope here is maybe we can talk through some of these, to maybe summarize where we're at right now and what's currently out there, and what I'm having a lot of conversations on. It's a combination of, I'd say, the majority of businesses out there who we're talking with are looking at the Paycheck Protection Program. That's the big one that everybody's largely heard of at this point. But there are a number of issues that are coming up there that we can talk through. But we've got those who kind of got a first round loan last year, and they're still working through either forgiveness or an audit, or they might also be considering applying for a second round loan. And that's the big stimulus kind of option that's out there right now. That's probably the most broadly applicable, is the second round of Paycheck Protection Program loans. So that's one. But probably the more underrated, less known about options, those other than the PPP, would include some industry-specific grant programs. So there are some, if you're in the healthcare industry, for example, or if you're a shuttered venue, is the, I guess, term of art now that we're using to talk about certain eligible businesses. Then there's a specific program that might apply to your business. In addition to that, there's also state and local administered small business grant options, and those are a little bit more broadly applicable and not industry specific. And then on top of that, we have what I guess I would lump into the category of tax incentives. And a lot of probably the most, or the least well-known of the stimulus options that are out there are these tax incentives. And they recently became much more valuable, or at least a little bit more easy to obtain. So we can talk through those as well, but to give us an initial maybe outline to work with, those would be kind of the categories: the PPP, the kind of industry-specific grants that are out there, state and local small business grants, and then these tax incentives.
Okay, that sounds great. And let's just quickly, cover PPP. I feel like that's been covered a lot. And so I agree with you. I think that some of these other grants and maybe loan opportunities, and certainly the tax incentives, have not been. So if we could, I'd like to focus some of our time on, a lot of our time on that today. So real quickly on the PPP, we know there was round one, And we're basically at the forgiveness stage. So if you could talk about that a little bit. And then round 2, I understand the rules have changed a little bit. So if we could touch on that.
Yeah, absolutely. So, yeah, we can, I think that's probably a good way to break it down. So we've got, on one hand, we've got a group of businesses out there who received a round 1 loan. And the issues that they're thinking about right now, I guess, there are a few. There are a few different issues. Some of them have not applied for forgiveness. If we haven't applied for forgiveness, we're probably getting into a stage where we should think about doing so. You have quite a bit of time. I believe it's 10 months from the end of your covered period, which in some cases is going to be, in the middle of this year. So lots of time in a lot of cases, but nonetheless, things have settled out basically. We received an update to the Paycheck Protection Program rules at the beginning of this year in the Consolidated Appropriations Act, which is the funding act that everybody's taking a look at now, and that revised the rules both for round 1 loans and then those who are looking at round 2 loans. And so, for example, if you didn't apply for forgiveness yet, you actually may have a benefit here in that if, for example, your loan is $150,000 or below, it's a much simpler application all of a sudden. It's like a 1-page form. So that's good. That's something to think about. Also, if you're not on that 1-page form and you're concerned about forgiveness, or we were a little touch and go on whether we were going to be able to request kind of full forgiveness, the rule revisions actually opened things up and allowed us to claim some additional costs as forgivable expenses, and it applies retroactively. So that's really helpful. Now, one other issue that's kind of applicable to our round 1 borrowers out there is that we're starting to see some movement on the audit front round 1 loans, and we've got a number of clients who, they say you're randomly picked for an audit. And in general, it's those businesses who received a $2 million or larger PPP loan. But we suspect that there will be some below that mark as well that will also be audited. And so if you receive a letter that says, hey, we're requesting some additional information, it's a good time to get in touch with your attorney is really the because these are pretty standard. We're seeing almost an identical first communication in every instance. The letter is going to ask for all the information that you are required to keep but not submit on the front end with your loan request or with your forgiveness request. And so that's pretty straightforward, but there's some internal documentation that we might be able to make sure is persuasive and clear, I would say. And so we want to think about that. So that's our first half of the PPP issues. Those are the round 1 issues. The more novel kind of new issues here are for our businesses out there who are looking at and applying for round 2 loans. And the high level overview here is that round 2 is in some ways a little tighter and in some ways a little more favorable. In some ways, we tightened up eligibility compared to round 1. For example, you have to be a little bit, you have to show that you were affected by coronavirus, essentially. So you have to show that you have a 25% reduction in gross receipts, for example, in order to qualify for round 2. There's some nuance in that, and it's something to take a look at and make sure that we're applying that rule properly. But in general, you have to show a reduction in business. And, that makes sense. To some extent, the legislation out there was designed to really make sure that those who are affected by the coronavirus are the ones who are eligible for round 2. And so we had some clients who were in, thankfully a really positive position where they received a round 1 loan, they expected to be really hard hit, and that just didn't quite pan out. And that's a good position to be in. And if that was you, there was a chance that you might not qualify for a round 2 loan. And unfortunate, but a good problem to have again. But so like I said, we tightened things up a little bit, but then on the other hand, if you qualify for a round 2 loan, you'll actually find that some of the rules are a little more favorable. So for example, you'll recall if you had a round 1 loan that there was all sorts of development and initial confusion as to, what's the amount of, what amount of time do I have to spend this money? And first it was 8 weeks, and then it turned into 24. And then there was confusion about it. Could it be somewhere between 8 and 24? And now the round 2 kind of makes this a little easier in that you can choose your own period of time between 8 and 24 weeks to spend your money and apply for forgiveness and how you judge that. And so it's kind of a choose your own adventure, I've been saying. If it makes sense to spend it in 10 weeks, because that's where your payroll costs kind of play out, then we can do that basically. Another favorable impact is that if you're in the hospitality industry, restaurants, hotels, things of that nature, you will qualify for a higher, the higher PPP loan. Essentially, it's 3.5 times your monthly payroll costs instead of 2.5. One last item that I would just mention before we move on to some of our other issues here and our non-PPP issues is if you're going to take a look at applying for a second round loan and you haven't yet, make sure you're just being kind of mindful about the certifications that you're making on the application. And what I mean by that in particular is there's one certification that if you received a round 1 loan, you probably heard all sorts of news about this. The necessity certification is a really important thing to think through. Essentially, there's a certification on there that says this loan request is necessary to support the ongoing operations of the applicant. And there was all sorts of development and questions and issues in the first round. You saw things like the LA Lakers applying for a loan and ultimately, in the news about whether they should have, and also, large restaurant chains, things like that, more public, entities that are out there and visible in the news. And so we tightened up the rules. What does it mean to be necessary? You may have looked at this, but if there's any question about whether the loan is necessary, we want to be very mindful about how we're making that decision. And that's something we're talking with a lot of clients about because, unlike in, April, May, June, when there were executive orders in Michigan that essentially said all businesses need to be shut down, the rule and the climate right now is just a little bit different. We still have some orders that are out there, but they apply a little differently. And some businesses aren't as affected by them, and some are partially open, and some are fully closed. And so to the extent that, we were not quite as affected as we were in April, May, June in particular, we want to think about how we're justifying the fact that this loan is actually necessary to support our business, so that we don't run into hot water because, as I mentioned the audit issues, one of the very first things they're going to ask for if you're audited on this is tell us how the loan request was necessary. And they've got a nice long form now that breaks this down factor by factor into what does it mean to be necessary. So thankfully we have a little more to go on, but it's something that we want to talk about and have documented at the front end rather than kind of making things up as we go along in the back end is the idea. So those are some of the issues. I always said let's get through that one quick, but there's always a lot to talk through on the PPP front.
Yeah, there is certainly. Thank you for all of that. And in relation to the Paycheck Protection Program, that's why everybody just says PPP, right?
Right.
There are other options out there, and I know that we don't have time this morning to go through all of those options. So maybe you can touch on a couple of big ones that might be state or even local grants or loan options. And then
Yeah.
maybe the other thing you can touch on is where to find this information, especially since we have some time constraints this morning.
Yeah, absolutely. So, if we're thinking about alternatives to the PPP, and actually I shouldn't even say alternatives, because alternatives suggest that maybe you can't apply for both. But most of the three that I have in mind here, well, two out of the three are typically you can apply for in addition to the PPP. One additional option is to take a look at state and local grant options that are out there. And this is a little more nebulous and difficult to pin down because it depends on where you're located, where the business is located. But the key phrase that we want to keep in mind on this front is it's called the Michigan Small Business Survival Grant Program. I'll repeat it again for those who aren't ready to write something down. It's the Michigan Small Business Survival Grant Program. And the way that this worked, you may have seen that Michigan passed some stimulus legislation earlier this year, end of last year, somewhere in there. Essentially, the state of Michigan allocated $55 million to implement this small business survival grant program. And the tricky thing about this is that they have rolled out, the state has rolled out these grant programs in different ways. Some of them have been administered top down, the state of Michigan, here's a website, go to it and apply, hopefully you get your money. Others, and most really of this money has been filtered down through local economic development organizations, what are called EDOs, or, at least the state of Michigan is calling an EDO. An example of this, if you're in Lansing, our local EDO is the Lansing Economic Area Partnership, or LEAP. And so, for example, LEAP is administering a significant chunk of money for our local businesses. If you're located outside of the greater Lansing area, you're going to have to look elsewhere. But there's an EDO that applies to every county in the state of Michigan. So if you Google Michigan Small Business Survival Grant Program, you'll come up with a MEDC, Michigan Economic Development Corporation website that lists every EDO and who you go to. So that's where you want to look. It lists. I'm seeing a comment that the applications are closed now, and so to clarify, what happened was EDOs applied for this funding. The local economic development organizations applied, and there are different EDOs that are out there. So the EDOs applied for their funding. The applications for EDOs closed. Now you need to reach out and find your EDO that is listed on that website and apply through them for, whichever is local for that county. So for example, LEAP, and it might be different timelines. The EDOs are on different timelines and application schedules. And so that's where the variation comes in on this. So find, there's a chart, find your county, find the corresponding EDO, find their website, and then, reach out to them for that grant opportunity. Typically they're in I think we're talking $10,000 to $20,000 range are what those, sometimes smaller, but that's a typical range that we're seeing for those small business grants. So that's the state and local and what's going on now. I will very quickly say that if you're in what I would call either a regulated industry like healthcare, you probably already know about these, but there are specific federal grant opportunities for you. The Provider Relief Fund has been one that we've done a lot of work on for healthcare organizations. If you're a shuttered venue, meaning you're a concert venue, a theater, in some cases a museum even, there are some potentially really valuable grant opportunities that are going to be available as well. Take a look at the shuttered venue grant. And then the last one that I wanted to mention, which is one that I think is probably the least well appreciated right now, is the Employee Retention Tax Credit. And this is It's not a grant, it's not a loan, but it's kind of similar to a grant in that it's a refundable tax credit. And it was recently expanded in the same legislation that gave us the second round of the PPP. Essentially, I'm going to call it the ERTC, the Employee Retention Tax Credit. So the ERTC, it's worth, it ends up being worth about up to about $5,000 per employee to offset certain employment taxes. It's a fundable tax credit. In some cases, you can request an advance of that tax credit to the extent that it doesn't offset you anticipate that it won't offset certain employment taxes. The big update here, last year, this is an either or. Is you either get the PPP or you get the ERTC. And so we were kind of pitching it to clients as, if we have a conversation about the PPP and you don't qualify or it just doesn't work out, take a look at the ERTC. Now, as of the recent stimulus legislation at the beginning of the year, it's both. And there's some retroactivity here. So you can actually look back and say, do I qualify on a retroactive basis and go back and claim this? Now you have to do some amending of potentially of some tax forms, but it's doable. And we have some clients who've done that and received the benefit. So the thing to think about here, in addition to the fact that it's both PPP and ERTC, is also that if you looked at this previously and you thought, I don't know that there's a benefit there, and you're a somewhat larger mid-size employer, let's say more than 100 employees, it's also more beneficial now. So previously there's this threshold of small employer that was set at 100 employees. Now that threshold was bumped up to 500. And so if you're under 500, and especially if you're between 100 and 500 employees, this is much more beneficial to you now, because previously if you were over that threshold, you could only claim the ERTC on employees who are unable to work because the business was affected by COVID, essentially. Now, if you're under that threshold, you can claim the credit on all employees, regardless of those who are 500 or below. It's all of your employees, as long as you're below that threshold. The way that the ERTC works essentially is that you have to show that you have a decline in gross receipts, or that you have a suspension of business. It can be a partial suspension of business. And we can help you flesh that standard out. But if you meet one of those eligibility requirements, then you are essentially allowed to claim this credit up to $10,000 per employee, and then you get 50% of that up to 10,000. So that's where I said it was 5,000 per employee. So the value is up to 5,000 per employee, but you claim that as a tax credit against certain employment taxes. So to boil it down, it is a little complicated, but it's worth looking into. If you've been affected by COVID, if you think you have that decline in gross receipts, or you've been even partially suspended, you're not able to do typical business as you have in pre-COVID, which is typical for just about all of our businesses. This is something to take a look at, and we've developed an informational memo that we can send. And we're happy to provide more information on this. I'm seeing another question pop up about that 100 employee threshold, which is a good clarification. It is true that you can claim the ERTC. I should have been a little clearer. So the ERTC is especially valuable for those that are under the threshold, which was previously 100 employees. If you're an employer with 100 employees, now it's up to 500. It's especially valuable if you're under that threshold. It's still valuable and worth taking a look at if you're above that threshold. You're still eligible. It's just a little less valuable because you can essentially only claim the credit on employees who are, being paid not to work, as Patty mentioned in the chat there. So Absolutely great point, great clarification. Completely agree. It's still worth taking a look at. I see another related question. Any partial suspension? So you know, the eligibility issue there, there's two ways to be eligible. One is a suspension that relates to an order by a state or local agency. And so right now that's typically the Michigan Department of Health and Human Services. And it's not, it doesn't have to be a full suspension. You don't have to be totally closed, but it has to be pretty material. And that's honestly where I can only go so far without providing legal advice to everybody on the meeting here, and it gets it's a little complicated, to be honest. This is one of those issues where I really do recommend getting in touch and talking through the issue, because the IRS has provided a number of fact patterns on their website that are helpful in determining whether this is a material suspension in business. Really, the first question is whether you meet this gross receipts test. It's kind of a two-option test. So you can meet it by gross receipts, by a significant suspension. And so, you know, usually we're first looking at gross receipts. If we don't meet gross receipts, then let's talk about whether we've been materially affected enough in order to talk about the suspension eligibility option. So that's the recommendation there. It doesn't have to be a full suspension, though, just to clarify.
That is a lot of information.
I know. It is.
But it's really great to know, and we appreciate that. And if there's no other questions, you know, we try to be respectful of everybody's time and keep this to 20-30 minutes each day, or each month, I should say, when we hold these. And so thank you, Taylor, very much for the information. It was a lot. And certainly, like I said, this is recorded, and you're welcome to reach out to Taylor or to us at the firm if you need any further assistance. Next month, our second Wednesday morning break is with Matt Fedor and Sydney Steele, and we're going to talk about business interruption insurance, and that's on March 10th. So with that, we will let you get on with your day. Thank you for joining us. Stay safe.